This is the easiest way to figure out if you should invest in a company. Step 1. Fundamental analysis. Look at a company's financial statements. What's their revenue, profits, debts? This gives you a snapshot of the company's financial health. Step 2. Analyze the industry. What's happening in the industry? Who are the competitors? Understanding the broader context helps you assess the company's future prospects. Step 3. Evaluate the management team. Who's leading the company? Are they experienced? Strong leadership can drive a company's success. Step 4. Technical analysis. This involves looking at past price trends and trading volumes. It helps you gauge market sentiment and trends. Step 5. Check recent news and developments. Has the company launched a new product? Are there legal issues? News can greatly influence a company's stock price. Step 6. Consider the risks. Every investment has risks. Assessing them helps you make an informed decision. And don't forget, investing isn't about following the herd. It's about doing your homework, understanding what you're investing in, and being patient. That's how you analyze a company for investment. Have questions? Drop it in the comments and follow us for more personal finance content.